When it comes to planning for retirement and protecting loved ones, seniors are often faced with a variety of life insurance options. One option that has been gaining popularity in recent years is the hybrid life insurance policy. But what exactly is a hybrid policy, and how does it work for seniors? That's what we'll explore in today's video. Let's start with the basics. Traditional life insurance comes in two main forms: term life and permanent life. Term life offers coverage for a set period of time, usually 10, 20, or 30 years. Permanent life insurance, like whole or universal life, provides lifetime coverage and often builds cash value over time. But neither of these policies typically includes long-term care coverage. That's where hybrid life insurance comes in. A hybrid life insurance policy is essentially a combination of life insurance and long-term care insurance. It is designed to address two major financial concerns seniors often face: providing financial support to loved ones after death, and covering the potentially high costs of long-term care while still alive. Here's how it works. With a hybrid policy, you pay premiums just like you would with a traditional life insurance plan. But instead of only paying a death benefit to your beneficiaries, the policy allows you to use some of the benefits while you are still alive if you need long-term care. This could include help with daily activities such as bathing, dressing, eating, or even nursing home or assisted living expenses. For example, imagine a senior has a hybrid policy with a death benefit of $250,000. If that person needs long-term care, they could access a portion of that benefit while still alive to pay for care. Whatever is not used for care would then go to their beneficiaries as a death benefit. This dual-purpose feature makes hybrid policies very appealing, especially when compared to standalone long-term care insurance, which can be expensive and may go unused if care is never required. With a hybrid policy, either the benefits are used for long-term care, or they are passed on to family members after death. That way, the premiums paid never feel wasted. Now, let's talk about some of the advantages of hybrid life insurance policies for seniors. First, they provide financial flexibility. Seniors can use the policy to cover unexpected long-term care needs without draining retirement savings. Second, these policies often come with guaranteed premiums. Unlike traditional long-term care insurance, where premiums can increase over time, hybrid policies usually lock in the costs up front. Third, they offer peace of mind. Seniors and their families know that whether the money goes toward care or as a death benefit, someone will benefit from the policy. Of course, hybrid life insurance is not perfect. There are some drawbacks to consider. One of the main downsides is cost. Hybrid policies typically require higher premiums than traditional life insurance. In some cases, insurers may even require a lump sum payment, which can be challenging for seniors on a fixed income. Another limitation is flexibility. Once you buy a hybrid policy, it can be difficult to make changes later. Finally, if a senior never needs long-term care, the returns on the policy may not be as strong compared to other financial planning options. So, who should consider a hybrid life insurance policy? Seniors who are concerned about the rising costs of long-term care, but still want to leave something behind for their loved ones, might find hybrid policies a perfect fit. They're also suitable for people who may not qualify for traditional long-term care insurance due to health reasons, since underwriting requirements for hybrid policies can sometimes be less strict. Before purchasing, it's important for seniors to ask a few key questions. What is the premium structure? Is it a one-time payment, or are payments spread over time? How much of the death benefit can be used for long-term care? Are there restrictions on the type of care covered, such as in-home care versus nursing facilities? And finally, does the policy offer inflation protection to ensure benefits keep up with rising healthcare costs? It's also a smart move to compare different policies and providers, Since not all hybrid plans are created equal, some may offer more generous long-term care benefits, while others may emphasize stronger death benefit payouts. Seniors should review the details carefully and, if possible, consult with a financial advisor who specializes in retirement and insurance planning. To summarize, hybrid life insurance policies for seniors combine the benefits of life insurance and long-term care coverage into one plan. They can provide peace of mind, protect assets, and ensure that money spent on premiums will benefit either the policyholder or their loved ones. But, like any financial product, they come with costs and trade-offs that must be carefully weighed. If you are a senior, or you're helping a loved one plan for their financial future, it's worth exploring hybrid policies as part of an overall retirement strategy. The key is understanding how they work, what they cost, and whether they align with your financial goals. Thank you for watching. If you found this explanation helpful, don't forget to like this video, subscribe for more financial insights, and share it with someone who might benefit. Your support helps us keep creating content that empowers you to make smarter financial decisions.